All right, so welcome to another video. Today, what we're going to do is we're going to take a look at the tech stocks like Facebook, Spotify, Roku. They basically are crashing after Netflix reported some earnings. So I'm going to go ahead and break some of those stocks down for you and just some overall perspective. Keep in mind, it's not a recommendation for anything, just my own opinion. And that's what we'll kind of get started with. And if you do want to grab some more charts on top of these, I would definitely recommend you check out the Discord channel, which will be in the description below. And you can see some of the evaluations that I do and sometimes post different charts here in the chat room or chat area. Again, not a recommendation, just some support resistance levels. And you can also see some of the other live classes that we have going on our website at tradersfly.com. There's a lot of freebies. You can even book a one-on-one coaching session on video if you like. So anyway, let's take a look at Netflix and some of these other tech stocks. A lot of them are selling off in a big way. And in other words, they're pretty much crashing. So if we pull up Netflix here, and I go in and just look at the movement here. I mean, this stock is just toast right now. We are down about 35%, and it's dragging down a lot of other stocks as well. So there's a lot of negative energy here going on with many of the stocks in the tech sector. So if we go in and check out even stuff like Facebook, you can see it's pulling down, 5%, almost $12. Take a look at Spotify, also another subscription service here, 6% down. Volume picking up on this as well. So you can see there's much more volume in these kinds of stocks right now. If you look at Roku as well, you almost did the full daily volume, and it's just a few hours into trading, also pulling down about 6% here on Roku. So the thing is when you have a stock like Netflix, who kind of reports early ahead of time, and meaning it's one of the early birds, it kind of gives you a little bit of a market sentiment. Hey, what's to come for some other companies? And when they're starting to say, hey, this is the biggest fall over a decade, the stock is losing subscriber counts, so they're struggling as a business. I mean, obviously, when you listen to earnings calls and you look at the numbers, it may not sound as bad, or, articles will spin it a certain way, but they're really struggling because they had to raise and hike prices, due to inflation, due to whatever the reason is. They were losing subscriber count. They're kind of topping out because everybody who's subscribed are already subscribed. So it's kind of like, maybe the better approach would be to try and make the business run more efficient, save on data costs or something like that. But to grow more subscribers at a certain point, you're already topping out because you're a big company. Now, when this company reports earnings, it's one of the earlier ones. And because of that, a lot of these other companies like a Facebook, like a Spotify, will start looking at these things and say, ooh, if I'm invested in Netflix as a shareholder, I probably am invested in the other companies as well, like a Spotify, like what else we've got, Facebook, like all these other tech stocks. It could be even like a Zoom, it could be Teladoc. They're all over the place. Not every one is going to be affected in the same way, because you could see Teladoc still Teladoc, where are we? Teldoc, it's not even on here. Doc. Okay. So if we look at a lot of these companies here, you can see they're going to be struggling a bit on the tech sector. And if I pull them all up, there's a few right here. Like here's what do we got? Etsy right here. Probably another one that might be struggling. You've got Spotify struggling today. You got PayPal struggling today. Daku right here. Okay, let me see. T-Doc. There it is. Teladoc. Okay, T-Doc is the one that I was looking at that came out. And then what else we got? Subscription based. Even some of the tech stuff like Nvidia, they're struggling a bit, because what you're going to see is a lot of the NASDAQ will then pull all these other stocks down, because when you're invested in one, you're probably invested in some of these other tech companies. And when you're invested in these other companies, you're like, okay, well, I just had a really nasty move with Netflix. I probably don't want another nasty move with Facebook. So let me go ahead and dump Facebook now before earnings, because we've got earnings coming out on 4/27. So let me dump Facebook now, so I don't have another plunge like a Netflix. So that's why people would be selling. They're kind of cautious about it. Same thing with Spotify. It's like, okay, well, I want to get out before the earnings because again, I don't want that problem. So again, earnings are in 427, so that's coming up pretty soon. So again, people are just a little more concerned or worried, especially with a market that's acting weak. And even though you have here Spotify that's, around $100 a share, it's kind of at the lower end already. The stock was almost at 400, and you can see it was fairly toppy. And now you're kind of at the lower end. Well, these investors are a little bit concerned now, saying, hey, well, I just had a nasty move with Netflix. Why do I want this other stock or company to also drop as well? So, when you look at a lot of these tech companies and sectors, let's just kind of go down to some of the biggest losers for the day. And you can check out Netflix here. Obviously, we're down quite a lot. I think it'll take some time for that to digest. Wayfair also now breaking down. It's not really a tech company. It's kind of more like an Amazon to some degree for furniture. But it's still, everything's based on their website, and it's breaking that $100 mark. So this is also, the stock is toast and it's having some trouble. Look at Shopify, also another subscription service here. In a big way, you're coming into about a $500 price point. Stock is struggling again. Tried to go a little bit higher, but now it's selling off as well. And today we're down about 8% down. So again, also toast. Stock is having trouble. Let's look at Cloudflare. We're down 6%. Just another problem right here, right at 100. Etsy down 6% as well, coming right into that $100 level. So you can see a lot of these stocks are right at these cusps where they're could be struggling quite a bit. We talked about Spotify here coming in, right around 120 right now. Volume on the bearish side, it's building. There's a lot of huge selling pressure that's in this stock. It's not looking good. Let's look at Roku. Also down about 6%. It's under the 100. Another problem, we got a little bounce here in Roku not too long ago, but again, you're getting right under there. This one trades a little bit lighter. Look at Twilio, tried to hold 130, but again, pulling back a little bit. So this bearish volume right there, just picking up a little bit of speed. You did get some bullishness in it, but again, we're just with the negative news on Netflix there, it just pressing lower. And here we've got Roku, another big one. Huge company in the past or stock, but the trend is still to the downside. 100 again. Look at this, the trend of these $100 ranges in these stocks. You're looking at 100, where they're all coming into that $100 spot. Square, there's that 100 again. Sweet spot, but just anytime you get a bounce, it's just choppiness and a bit of a problem. So definitely want to be a little bit more careful here. Snap also down. Look, $30 is sweet spot. Try to pop a little bit, but you're kind of in that range between 30 and 40. Again, very choppy. And as you look at kind of this, stock struggling. Here's Pinterest coming into almost a $20 range. You're near the lower ends over here, near that 20. Hopefully it can bounce somewhere around the 20, but it'll take a little bit of time before this will probably happen. So you've got a little bit of resistance right here. Right there, there's a lot of rejection at that level. So again, trouble in Pinterest paradise. Disney stock also toast from the subscribers. They're talking right here. So picking up speed similar to Netflix, even though the earnings are on 511. But you got trouble. The stock is struggling. We're down about 4% right now, and that's not good. Let's see what else we've got. And I mean, those are kind of the big ones, where the stocks are really struggling a bit, holding things up. Even though Tesla's down 2%, it's not really a subscription service, but it's still in the kind of partly tech industry, you could say. They're into a lot of the AI. Really, a lot of the cars are AI. Amazon as well, struggling a little bit. But this one, again, it's just kind of flatlined a little bit here. So there you are at 3,200, 3,000. So could it go here a little bit and then downward? Yeah, absolutely. You could retest those levels. So the market is acting a bit weak. So even though we did get this little bounce recently, this could kind of follow through a little bit more lower, and we'll see how that progresses. But overall, Netflix is dragging down quite a bit. Even though we are off the lows, you can see here, let's just zoom in a little bit. We sold off quite a bit. Now we're trying to pop a lot, and this is from 215 to 225. So you came back a little bit, but it's still down from a percentage basis, fairly nasty, and it's dragging down a lot of stuff. So be a little more careful here, as this can continue to roll into a lot of stocks in the tech sector. You can see a lot of them are down about 6%. Now, some of them will get some of those pops here coming in. They should. But after earnings, these can snap back fairly quickly if the earnings are good. You did have some nice earnings on like something like IBM, as weird as it is, and this one's pressing higher and looks okay right now, and it's moving really well with really nice volume, which is weird. Well, like, people are popping into IBM, but I guess they're kind of a little bit more worried about these, high flyer, high volatility stocks like a Netflix, because you could get a drawdown of 36%, and that can be extremely nasty and painful. So anyway, it's it's a sad moment for a lot of investors here that are in the stock and have been struggling quite a bit, because you are down. When you look at this, we're down from Netflix almost 70%, and that's pretty bad, right? So that stock was at almost 700. Now we're down to 200. So quite a big sell-off, and it'll take quite a lot of time for this to level out. 2018 to 2022, we're near at the same levels here. So that's 1, 2, 3, 4, almost 5 years. So maybe it'll take 5 to 7 to get back up there, unless something amazing happens, because to go up, it takes a lot longer than it does to go down. So anyway, hope you enjoyed the video. Thank you so much for joining me. Feel free to grab some freebies here by clicking the link right down below, and I'll see you in the next episode.